Based on the historical data and forecast, Bitcoin shows a downtrend with decreasing forecast prices. The RSI indicates that the asset is currently in a neutral range, fluctuating between 39.2 and 54.0. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a moderately aggressive strategy. We will implement a combined RSI and Bollinger Band strategy. First, we will initiate a long position when the RSI falls below 20, with an entry price of $102,300. The stop loss will be set at the lower Bollinger Band, which is $102,300. The target price will be the center of the Bollinger Bands, which is $103,600. This strategy leverages the potential for a bounce from the oversold condition indicated by the RSI and the support provided by the lower Bollinger Band. If the price fails to reach the target and falls below the stop loss, we will exit the position to minimize losses. The combined strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Ethereum has shown significant volatility, with periods of both upward and downward trends. The RSI consistently fluctuating around the 40 mark indicates indecision in the market. The forecast predicts a continued downward trend, with prices dropping to $3,740. Combining this with the Bollinger Bands, the price is currently near the lower band, suggesting a potential bounce. Therefore, I recommend a contrarian strategy focusing on short-term gains. My proposed strategy involves a long position at $3,710, capitalizing on a potential bounce from the lower Bollinger Band. The stop loss should be set at $3,620 to mitigate risk if the downward trend continues. A target price of $3,870 is set, aiming to capture a rebound towards the recent historical high. This strategy leverages the anticipated short-term recovery while incorporating risk management through a conservative stop-loss placement. This portfolio is a blend of RSI and Bollinger Band strategies, aiming for a high-return, low-risk investment. Based on the historical data and forecast, XRP shows a slight downward trend in the recent forecast period, with prices ranging from $2.34 to $2.42. The RSI consistently stays below 50, indicating a generally weak momentum, with dips below 40 suggesting potential oversold conditions. The Bollinger Bands show that the price is currently near the lower band, which could signal a potential bounce. My strategy will be a combination of RSI and Bollinger Bands. I recommend a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. Specifically, enter a long position at $2.34. Set a stop loss at $2.23, just below the support level, to limit potential losses. Aim for a target price of $2.55, which aligns with the previous resistance level. To refine this strategy, I will incorporate a trailing stop loss. Once the price reaches $2.45, move the stop loss to $2.40 to protect profits. Further, if the RSI reaches 60 while in the position, consider taking partial profits at $2.50 and moving the stop loss to break even. This combined approach leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. This strategy aims to capitalize on short-term fluctuations while protecting against significant downside risk. Based on the historical data and forecast, BNB has shown a volatile trend with periods of both upward and downward movement. The price has been fluctuating between the support price of $956 and the resistance price of $1,010. The RSI values indicate that the asset is mostly within the neutral zone, with a recent dip to 37.0, suggesting a potential oversold condition. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently approaching the lower band. Given this analysis, I recommend a moderately bullish strategy focusing on capitalizing on potential rebounds. The strategy involves entering a long position at $1,020. We will place a stop-loss order at $991 to protect against potential downside risks. The initial target price is set at $1,030, which aligns with the forecast price and the middle of the Bollinger Bands. If the price reaches $1,030, we will move the stop-loss to break even to secure the initial investment. A secondary target price of $1,060 will be considered if the price continues to show upward momentum. This strategy combines the oversold RSI signal with the Bollinger Bands and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently remains below 50, indicating a bearish momentum, with a recent dip to 32.9, signaling oversold conditions. The Bollinger Bands also support this view, with the price trading near the lower band, suggesting potential for further decline. My strategy will be a short position targeting a continuation of this downtrend. I recommend entering a short position at $177, placing a stop loss at $173 to limit potential losses if the price reverses. The initial target price is $164, aiming to capitalize on the immediate downward momentum. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it indicates a strong oversold condition, which is not currently present. However, if it does, consider a long position. When the price touches the lower Bollinger Band, it suggests a potential rebound. I will implement a portfolio that prioritizes the short position at $177 with a stop loss at $173 and a target price of $164. If the price reaches the support level of $158, consider adjusting the stop loss to $165 to protect profits and potentially allow for a rebound. This combined approach offers a balance between capitalizing on the current downtrend and mitigating risk. Based on the historical data and forecast, TRON has been in a downtrend, consistently approaching the support price of $0.275. The RSI has been mostly below 50, indicating a weakening momentum, and has recently dipped below 30, signaling an oversold condition. The Bollinger Bands show that the price is nearing the lower band, reinforcing the bearish sentiment. The forecast for the next week predicts a continuation of this downward trend, with prices hovering around $0.28. Therefore, I recommend a short position strategy. Entry price will be $0.281, with a stop loss placed at $0.295, just above the recent high and the lower Bollinger Band. The target price will be $0.275, aligning with the established support level. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI is below 20, oversold, it suggests a potential bounce, but given the overall downtrend, it's more likely a temporary reprieve. When the price touches the lower Bollinger Band, it indicates a possible bottom, but in this case, the forecast suggests further decline. Combining these signals, I propose a conservative approach. We enter short at $0.281, set a stop loss at $0.295, and aim for a target price of $0.275. This strategy balances the potential for a short-term rebound with the prevailing bearish trend, maximizing risk-adjusted returns. Based on the historical data and forecast, Dogecoin shows a downtrend with decreasing prices. The RSI consistently remains below 50, indicating a bearish momentum. The forecast for the next week predicts further decline, reaching as low as $0.162. Considering the support price of $0.158 and the bearish indicators, a short position is warranted. I recommend entering a short position at $0.186. To manage risk, set a stop loss at $0.195, just above the recent resistance. The initial target price should be $0.167, aligning with the recent low and the forecast. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the lower band, reinforcing the downtrend. If the price breaks above the upper band, which is currently $0.208, it signals a potential trend reversal, and the short position should be closed. If the price reaches the target of $0.167, consider a trailing stop loss to capture further gains. If the price continues to decline, consider adjusting the target price to $0.158, the support level. This combined strategy leverages RSI and Bollinger Bands to maximize profit while minimizing risk. Based on the historical data and forecast, Cardano shows a downtrend. The RSI consistently remains below 50, indicating a lack of strong bullish momentum, with values frequently dipping below 30, suggesting oversold conditions. The Bollinger Bands are widening, confirming the increasing volatility and downward pressure. The forecast for the next week predicts further decline. Therefore, a short selling strategy is recommended. We will enter a short position at $0.61, placing a stop-loss order at $0.64 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.541, based on the forecast and the lower Bollinger Band. To refine this strategy, we will incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it indicates an oversold condition, suggesting a potential bounce. However, given the overall downtrend, we will prioritize the short position. If the price touches the lower Bollinger Band, it signals a potential short-term bounce, but we will maintain the short position unless the RSI reaches 80, indicating an overbought condition and a potential trend reversal. If the price reaches $0.541, we will take partial profits and adjust the stop-loss to the entry price of $0.61 to protect the gains and potentially benefit from a further decline. This combined approach offers a balance between capitalizing on the downtrend while mitigating risks. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a downtrend, particularly evident in the recent forecast prices consistently below $4,000. The RSI consistently dips below 50, indicating weakening momentum, and the forecast data suggests further decline. Considering the support price of $3,640, we will implement a contrarian strategy. We will initiate a long position at $4,040. A stop-loss will be placed at $3,910 to mitigate potential losses if the downtrend continues. Our target price will be $4,210, capitalizing on a potential bounce from the support level. To refine this strategy, we incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the bearish outlook. However, a potential rebound towards the middle band could offer a short-term profit opportunity. Therefore, we will adjust the target price to $4,010, a conservative gain considering the prevailing trend. The portfolio will prioritize the contrarian long position with an entry price of $4,040, a stop-loss at $3,910, and a target price of $4,010, balancing risk and reward in this volatile market. Based on the historical data and forecast, Chainlink shows a downtrend. The RSI consistently fluctuates, but recent values indicate a potential oversold condition, particularly on November 3, 2025, with a reading of 34.4. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the forecast price indicates a continued decline. Therefore, I recommend a short selling strategy. Entry price will be $16.4, with a stop-loss set at $15.7 to protect against a potential rebound. The initial target price is $15.4, aiming to capitalize on the predicted downward momentum. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. When the RSI falls below 20, it signals a strong oversold condition, reinforcing the short selling decision. If the price touches the lower band of the Bollinger Bands, it further confirms the downtrend. If the RSI rises above 80, consider covering the short position. Adjust the target price to $15.5 if the price consistently stays below the lower Bollinger Band. This combined approach offers a balanced risk-reward profile, leveraging both momentum and volatility indicators for optimal returns. Based on the historical data and forecast, Bittensor exhibits a clear upward trend, breaking through the resistance level of $497. The RSI consistently moved above 50, indicating bullish momentum, and recently reached 67.9, approaching the overbought level of 80. The Bollinger Bands have been expanding, confirming the increasing volatility and upward price movement. The forecast data projects further price increases, with prices expected to reach $522. Therefore, my strategy will be a bullish position. I recommend entering a long position at $474, placing a stop-loss order at $464 to protect against unexpected downturns, and setting a target price of $504 for a potential profit of $30. To refine this strategy, I will incorporate the Bollinger Bands and RSI signals. When the price touches the bottom of the Bollinger Bands and the RSI is below 30, it signals an oversold condition, which is a good entry point. Conversely, when the price touches the top of the Bollinger Bands and the RSI is above 80, it signals an overbought condition, which is a good exit point. Considering the current upward trend and forecast, I suggest entering a long position at $484, with a stop loss at $464 and a target price of $518. This strategy balances the potential for high returns with risk management, leveraging both momentum and volatility indicators. Based on the historical data and forecast, Bitcoin shows a downtrend with decreasing forecast prices. The RSI indicates that the asset is currently in a neutral range, fluctuating between 39.2 and 54.0. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a moderately aggressive strategy. We will implement a combined RSI and Bollinger Band strategy. First, we will initiate a long position when the RSI falls below 20, with an entry price of $102,300. The stop loss will be set at the lower Bollinger Band, which is $102,300. The target price will be the center of the Bollinger Bands, which is $103,600. This strategy leverages the potential for a bounce from the oversold condition indicated by the RSI and the support provided by the lower Bollinger Band. If the price fails to reach the target and falls below the stop loss, we will exit the position to minimize losses. The combined strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, official Trump demonstrates a strong uptrend, breaking through the resistance level of $7.42. The RSI consistently fluctuates above 30, indicating a generally bullish sentiment, and the Bollinger Bands show that the price is currently trading near the upper band, suggesting continued upward momentum. Therefore, I recommend a long position strategy. We will enter a long position at $7.29, placing a stop-loss order at $7.1 to limit potential losses. The initial target price will be $7.54, aligning with the forecast price for November 4, 2025. To maximize returns and manage risk, I propose a dynamic target price strategy. Once the price reaches $7.54, we will move the stop-loss to break even, protecting our initial investment. If the price continues to rise, we will set subsequent target prices at $7.4, $7.33, $7.31, and $7.33, taking partial profits along the way. This approach balances the potential for high returns with the need to secure gains in a volatile market, ensuring a profitable investment in official Trump. Based on the historical data and forecast, NEXO shows a declining trend with recent dips into oversold territory. The RSI consistently hovered below 30, reaching a low of 26.8 on October 31, indicating a strong oversold condition. The forecast predicts further decline, with prices dropping to $1.07. Considering the support level at $1.01 and the current price around $1.09, a contrarian strategy focusing on short-term gains appears viable. I recommend a long position entry at $1.09, placing a stop-loss order at $1.01 to mitigate potential losses if the downtrend continues. A conservative target price is set at $1.13, aligning with the recent resistance level and anticipating a short-term bounce. To refine this strategy, we incorporate Bollinger Bands. The price consistently traded near the lower band, reinforcing the oversold signal. While the forecast predicts a continued descent, a bounce off the lower band is possible. Therefore, I suggest a portfolio combining the RSI and Bollinger Band strategies. The primary strategy is the long position at $1.09 with a stop-loss at $1.01 and a target at $1.13. As a secondary strategy, consider a short position if the price breaks below the lower Bollinger Band, around $1.07, with a stop loss at $1.08 and a target at $1.05. This blended approach offers a balance between capitalizing on potential rebounds and protecting against further downside risk. Based on the historical data and forecast, SUN token exhibits a downtrend. The RSI consistently hovers below 50, indicating bearish momentum. The forecast data projects further declines, and the price is approaching the support level of $0.0213. Therefore, a short selling strategy is recommended. We will enter a short position at $0.0225. The stop loss will be set slightly above the upper Bollinger Band at $0.024 to protect against potential upward spikes. The initial target price will be the support level of $0.0213, offering a reasonable profit margin. To refine the strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, it indicates a potential short selling opportunity. If the price falls below the lower band, it signals an oversold condition, and we will adjust the stop loss accordingly. The portfolio will prioritize the short selling strategy with RSI and Bollinger Bands. If the price reaches $0.0213, we will take partial profits and move the stop loss to break even. Further, if the forecast continues to decline, we will set a second target price at $0.0208. This combined approach leverages multiple indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, PAX Gold has been exhibiting a sideways trend with volatility. The RSI consistently fluctuates around the midpoint, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been widening recently, suggesting increasing price volatility. The support price is consistently around $3,950, while the resistance is around $4,020. The forecast predicts a slight downward trend in the coming week, with prices potentially reaching $3,940. Considering these factors, I recommend a cautious strategy focusing on short-term opportunities. My strategy is to implement a range-bound trading approach. I suggest entering a long position at $3,960, capitalizing on a potential bounce from the support level. The stop loss should be placed at $3,940 to mitigate potential losses if the price breaks down further. The initial target price is $4,020, aligning with the resistance level. If the price reaches $4,020, consider taking partial profits and adjusting the stop loss to protect gains. A second target price is $4,110, which is a more ambitious goal based on the historical price action. This strategy combines technical indicators with support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, ARK shows a declining trend. The RSI consistently hovers below 50, indicating a prevailing bearish sentiment, with several days dipping into oversold territory below 30. The Bollinger Bands also suggest a contraction, indicating increasing volatility. The forecast for the next week predicts a continued downward trajectory, with prices falling to 0.295, 0.294, 0.289, 0.281, 0.282, 0.283, and 0.272. Given this information, a short selling strategy is recommended. The entry price should be $0.283. Place a stop-loss order at $0.295 to limit potential losses if the price unexpectedly reverses. A reasonable target price, considering the forecast and recent downward trend, would be $0.272. To refine the strategy, we can incorporate the RSI and Bollinger Bands. When the RSI falls below 20, oversold, it suggests a potential bounce, but in this case, the forecast indicates a continued decline. When the price touches the lower band of the Bollinger Bands, it signals a potential for a rebound, but the overall trend is bearish. Therefore, the short selling strategy remains the most appropriate. The position size should be carefully managed to account for the increased volatility. The final portfolio will be 100% short selling with an entry price of $0.283, a stop-loss price of $0.295, and a target price of $0.272. Based on the historical data and forecast, Zcash exhibits a strong upward trend. The price has consistently broken through previous highs, and the forecast indicates continued momentum. The RSI consistently remains above 60, with values frequently exceeding 70, suggesting a bullish sentiment. The Bollinger Bands have been expanding, indicating increasing volatility and upward price movement. Therefore, a long position strategy is recommended. I suggest entering a long position at $418. The stop loss should be set at $404 to protect against a potential pullback. The initial target price is $477 based on the forecast. To maximize returns, I propose a dynamic trading strategy. After reaching the initial target price of $477, consider moving the stop loss to break even to lock in profits. Further, if the price continues to rise, set subsequent target prices at $495 and $511, based on the forecast. The RSI nearing or exceeding 80 suggests a potential pullback, so be prepared to take profits and reevaluate the position. This strategy combines the momentum of the upward trend with the volatility indicated by the Bollinger Bands and the overbought signals from the RSI, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Dash shows a strong uptrend, breaking through the resistance level of $126. The RSI consistently moved above 50, reaching over 80 in the recent days, indicating a strong bullish momentum. The forecast data for the next week projects a continuous increase in price, reaching $138. Considering these factors, I recommend a long position strategy. We will enter a long position at $85.4, placing a stop-loss order at $82.4 to limit potential losses. The initial target price will be $99.2, coinciding with the first forecast price. To maximize profit, we will implement a trailing stop-loss strategy. Once the price reaches $99.2, we will adjust the stop-loss to $96.2. Further, when the price reaches $106, we will adjust the stop-loss to $103. Finally, when the price reaches $116, we will adjust the stop-loss to $113. The final target price will be $138, aligning with the last forecast price. This strategy combines RSI, Bollinger Bands, and forecast data to capitalize on the strong uptrend of Dash while managing risk effectively. Based on the historical data and forecast, DECRED shows a strong upward trend, particularly evident in the recent surge to $29.4 and the projected increase to $29.5. The RSI reaching 84.2 indicates an overbought condition, suggesting a potential pullback, but the overall momentum remains bullish. We'll implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. Initially, we will wait for a pullback to the lower Bollinger Band, around $21.4, which aligns with the forecast for November 4, 2025. We will enter a long position at $21.4, placing a stop-loss just below the lower Bollinger Band at $20.5 to mitigate risk. Our initial target price will be $24.3, near the forecast for November 5, 2025, and the upper Bollinger Band. If the price continues to rise beyond $24.3, we will move our stop-loss to the break-even point, $21.4, and adjust our target price to $29.5, aligning with the forecast for November 10, 2025, and the support level at $27.1. This strategy aims to capitalize on the prevailing bullish trend while incorporating risk management through stop-loss orders and dynamic target price adjustments. The combined use of technical indicators and forecast data will enhance the probability of achieving high returns.